and a large portion of the global trade are backed by LCs and guarantees. But if we see where the growth comes from, in a growing business or in a growing economy, factoring has to take a major role. So the MSMEs have to be aware that factoring would really help them come outside the secured financing options of working capital and avail factoring, which will really help them to have export competence and also grow their turnover.
This is episode number 38 of MSME Talk on Export-Import Finance Masterclass with Indrajit Samanta. Welcome back to MSME Talk podcast for micro, small, medium enterprise businesses and startups. MSME Talk brings value addition guidance, products, services, industry experts, and information to scale up and build unshakable, long-lasting business. So please don't miss to hit follow or subscribe button. Also, do sign up for newsletter for more information and update. Link given in description. Welcome to MSME Talk podcast in Industry Expert segment. Hi, I'm Tripti Sharma, your host for today. So today we have got an episode in which we are marrying together export, import, and the financing part of it. So just like domestic business, for export and import as well, availability of funds is a very basic requirement for the businesses. But the reality is the process for loan, credit, or financing in case of export-import is little different from domestic trade finance. In today's episode, we have got an expert for you to dive into fundamentals of export-import finance, exploring key concepts, checking various financing options, financing process, compliance requirement, navigating common challenges and risk for MSMEs in a short masterclass. Tune in and get onto your journey to Export-Import Finance Masterclass with none other than Indrajit Samanta. So today's expert, Indrajit Samanta, is head of RXIL Global. He has worked with more than 200 clients in supporting them in their growth through export-import finance in his more than 1.5 decade of career. Let me welcome Indrajit on the show now. A very warm welcome, Indrajit, on MSME Talk podcast.
Thank you, Tripti, for inviting me today. I'm looking forward to having a great discussion with you.
Wonderful. Thank you, Indrajit, for coming on the board today. So, Indrajit, would you like to start with today's masterclass by sharing a little bit about you, your little bit of a background?
So I lead RXIL Global, which is a wholly owned subsidiary of Receivables Exchange of India Limited. We call it RXIL. RXIL Global is primarily into trade financing. Prior to RXIL, I have worked with ICICI Bank in their SME finance division. With over a decade, I have been into domestic supply chain and cross-border trade finance and in other related fields, and supported more than 200 small and medium enterprises in the country.
Okay, wonderful. So you have got export, import, SME working, all those experiences helping growth and also helping the growth of, business sides of India. Wonderful. So Indrajit, we'll begin with our very basic first level question, which we ask is, how does export, import trade finance is different from domestic trade finance?
Yes, Tripti. There are key differences in the nature of domestic and vis-a-vis cross-border trade, and I would like to highlight a few of them. Unlike domestic trade, where both the parties are present in the same geography or same country, cross-border trade requires knowledge of the fact that there is more than one geography involved, and hence the financing also requires taking specific approach in terms of who is the buyer and the seller, what are the geographies, what is the political risk, what is the foreign currency liquidity risk involved, and other associated risks which are specific to the underlying trade. Second, cross-border trade is highly regulated and monitored, and hence the terms of transaction between the exporter and the importer, and hence the financing aspects also need to be in compliance with the current prevailing regulations of that country or other countries. Third, the financing solutions in cross-border trade are also very structured in nature, given that there are specific nuances of the transaction between every buyer and seller, and hence there is no generic solution. Every relationship is unique and characterized by the political risk, credit risk, delivery terms, payment terms, track record of transaction and payments between the buyer and the seller, among many other things which needs to be taken care of.
Okay, so this sets us that why we have difference between the domestic and the export import finance. And one of the primary point which I'm picking up from your points is that the countries are different. Hence, laws are different in both the countries, and each countries have their own credit situations. And logistic wise, also there's a difference in the parties, that difference in the physical delivery also, right? So the timing could be the different of delivery and the receiving of the consignment by the importer. Okay.
Yes.
So, what are the criteria and eligibility requirement, Indrajit, are there where MSMEs go and access to get export import finance from different sources available in the market?
In terms of criteria, there is no specific criteria for an MSME to avail a facility. So we bifurcate facility in terms of secured facility and unsecured facility. Obviously, for a secured facility, the MSME has to go to a bank or a factoring company in India and then request for a working capital facility. If we talk about unsecured financing, there is no specific criteria as such. There, the MSME has to provide the details of their current and prospective cross-border transactions, and basis the details that is provided, the financiers would propose the best possible solution for them, understanding the entire aspect of the underlying transaction. Typically, in export-related transactions, the importer's credibility and other criteria like jurisdiction, sanctions, AML safety concerns are checked, and basis that the financier can extend a financing or a factoring facility to the exporter. If we talk about import side requirements, the financier would assess the financials of the MSME or any corporate for that matter, because then they become the ultimate obligor for an import side transaction.
Okay, got it. So here you're saying in case of export financing, whoever is the importer, banker or financier would like to know more details related to that apart from obviously the client MSME. But in case if MSME want to take import financing, then credibility check of MSME would be done more. Am I right?
Yes.
Okay. So Indrajit, let's move to the next part where process of export import finance is done. Like how this entire steps happens in a brief. How can you explain this?
Yes. So the process starts with the MSME itself. So they reach out to the banks, the factoring companies, and other financing sources in the market and try to understand what is best for them. So they can cater, the first solution would be a working capital limit or an enhancement of existing working capital limit if they require. Working capital would involve pre-shipment financing as well as post-shipment financing. In case of a unsecured financing option, if the MSME is looking for that, and that is in trend because for a growing business, MSMEs would need additional funding requirement over and above their limits provided by the banks, which are backed by security. And hence, the MSMEs would reach out to other factoring options, which are typically unsecured and predicated on the risk of the importer. So the MSME would reach out to the factoring companies and provide the requirements of the different types of transactions that they want to do. Once the requirement is finalized, then the financier starts working on a proposal basis the information received from the MSME customer, and they will do their internal due diligence to propose a facility. Subsequently, once the financier has taken the time for the due diligence, which is around 5 to 10 working days, where they typically check all the aspects of the underlying trade between the importer and the exporter, the geographies involved, the buyer's credibility involved, and other aspects of what is the payment terms along with the payment history. So all these checks are done at the financier's end, and they come out with a indicative offer to the MSME customer. It is at this point that the MSME has to agree to the initial proposal and arrive at a mutually agreed terms, which are the initial terms. And once they are agreed upon, then the financier starts working towards a final underwriting and a limit setup for that particular transaction. And this process again may take another 3 to 5 working days, where the customer is onboarded and the entire financing structure is put in place. After the completion of the final underwriting, the final terms of the facility are produced to the customer, and when it is signed and then taken further for activation. Now, for activation, which is the first transaction, the financer performs the onboarding of the customer, and then all the shipment related documents are uploaded on the platform, and the financing takes place.
Okay. So overall, how many days typically in a bank this would be taking?
Typically, a bank or any factoring company would have a turnaround time of 10 to 15 days for a complete underwriting, and another 7 to 10 days for activation or the first disbursement, as we call it.
Okay. And every new disbursement, say every new order of export or say import, so will that be counted as say 50% of the work is done at the starting of the limit setting, and then only 50% work is done of related to documents which is pertaining to the each transaction every time? How does it happen?
Yes, because cross-border trade is very transaction or documents heavy, and hence the first transaction takes some time, and the next transactions are always a repeat of what has happened, given that it is a same buyer. And if it is a new buyer that the MSME exporter wants to add to the existing facility, it again has to go through the same process.
So every transaction is just not like, okay, fine, it will happen quickly. You have to take care of all the documents process again. Every transaction is new. Let's understand on the different financing options and products available for small businesses, SMEs and MSMEs for export-import finance at different stages.
Right. So typically, I would start with working capital products, which are normal fund-based and non-fund-based limits, which are offered by banks, SMEs, again, which are secured and backed by collaterals. Fund-based limits typically include pre-shipment and post-shipment finance, both in domestic and foreign currency. And non-fund-based limits include LCs and guarantees, which are also required for cross-border trade. Now, if we move out of the conventional working capital limits and look at other products, which typically include factoring and other related products on the import side as well, there the MSMEs are actually benefited. First, because it is unsecured. Second, they are mostly without recourse. And in case of without recourse, the financiers use 2 3 options. If we talk about other trade financing options that are available to the MSMEs, which typically include factoring and other products, if we see, they are all without recourse to the MSMEs. Recourse means that the MSMEs would have the ultimate liability. So if we say it without recourse, then the MSME does not have any liability once they receive the funds in all these financing options. And that is the benefit that the MSMEs would derive from this facility. And for a financier to provide a without recourse financing to a MSME, they have to structure it accordingly so that their risk is mitigated. The first option being insurance, where the financier can take an insurance facility on the loans extended to the MSME. The second option would be a two-factor model under FCI, where FCI is a global body and it is a network of more than 400 factoring companies globally, which offer credit protection services to the financiers. And the third option being a bank to bank limit or any other credit guarantee structures similar to insurance. On the import side, financiers can provide payable financing facilities and also import factoring, which is credit protection on the importer side, and financing of the overseas suppliers of the importers. So these are broadly the different types of products which are available to the MSMEs for their exports and imports.
So Interestingly, you have, highlighted on that recourse part where there is an option available that they can get facility from the bank without providing the collateral also. And there are instruments existing for that. And MSMEs should at least try for those definitely before moving into the collateral based funding. So now let's understand, Indrajit, what or rather I should how does these different instruments work, because you have named couple of them.
Right, Tripti. So for export factoring without recourse, the financier does not take any recourse on the MSME. And then to mitigate their risk, the facilities are either backed by trade credit insurance, which is taken on the buyer to obtain protection against the buyer's non-payment risk. So the financier has to ultimately mitigate the risk by multiple options. And then these options create different financing structures. The first being insurance. The second is where the export factoring is done in a two-factor model where there is an import factor involved. Typically, the import factors belong to the geography of the foreign buyers. And so the import factors can offer credit protection and collection facilities to the financiers. If we consider the reverse situation where the MSME would be importing, the import factors would be in the country of the MSME. And then their suppliers who are outside the country can seek credit protection from the import factors in the country of the MSME in case of importing. So import financing options also are structured in the same format where the ultimate recourse is on the buyer and the facilities are either direct underwritten on the credibility of the buyer or backed by sufficient risk mitigation options like credit insurance or a two-factor model or any other credit guarantee instrument. Another product on the cross-border trade, which majorly controls a large portion of the global trade, are LCs and guarantees. Conventionally, if we see, all the MSME exports largely are backed by LCs, where they take a LC from their foreign buyers and supply the goods under that LC, which provides them a security that yes, on the due date, they will receive the payment and they are not at the mercy of the buyer. Similarly, if a corporate or a MSME is importing, they would have to also issue a LC to their overseas suppliers, who would then want a security from them as well. So it is a secured product, and a large portion of the global trade are backed by LCs and guarantees. But if we see where the growth comes from, in a growing business or in a growing economy, factoring has to take a major role. So the MSMEs have to be aware that factoring would really help them come outside the secured financing options of working capital and avail factoring, which will really help them to have more export competency and also grow their turnover.
So, Indrajit, interestingly, you have highlighted about how MSMEs can increase more growth, and they should also try to move ahead beyond LCs and other guaranteed and secured products to factoring, etc., which we will understand more from you. What could be the possibilities? But as of now, I want to know of all these above, which is the most difficult and easy option in perspective of timelines and eligibilities?
My sense would be today the factoring market is very competitive and the turnaround times are very less. And the MSMEs would get a very fast solution on a factoring product. If even if they approach the usual factoring companies who are regulated in India, or there are plenty of other fintech come factoring companies who are foreign entities and they provide factoring services or receivables purchase services in India. The third option are the platforms like RXIL Global, where they can approach and get multiple solutions through a single marketplace format. That would ideally help them to bring down the turnaround time and have a better outlook towards their exports.
Okay. So, Indrajit, while in one question you have answered us two, and I will just take a clarification here from you that if we have to see different sources of export import finance, you have given an idea of where ideally should be factoring. It's very competitive market. Many players are providing it, and different places our MSMEs can go. But if we want to see beyond factoring also, like traditional instruments and all the instruments, what are the typical sources of these export-import finances?
Let's take a quick break.
MSMEs and startups are looking for various kinds of support and upgrade. Are you a product service provider, expert, advisor, consultant, mentor for MSMEs and startups? Do reach out to MSME Talk to list your business. Check the link in the description.
The typical sources of export import finance are the working capital facilities. And if you move out of the working capital facilities, it is primarily factoring. And when I say factoring, it's an entire universe which consists of different structures backed by insurance, backed by two-factor model, and backed by other formats under which the transaction can happen. But it is ultimately a receivables purchase or a factoring product that takes place, and it is the best solution that the MSMEs can get, which will help them to have a without recourse facility and quick encashment of their receivables. And to add, the sources of these factoring options would be first the registered and regulated factoring companies in India. The second would be the fintech and the new age factoring companies who are foreign companies and they're providing factoring services in India. And the third are the platforms like RXIL Global, where the MSMEs can give their information and their requirements, and the platform can work with different financiers to provide them the best solution.
Okay. If we ask you now, what are the most common challenges MSMEs face while engaging in export-import financing processes? So, what is your experience?
So, some of the most common challenges for MSMEs today for doing cross border trade first would be adherence to the compliance and the documentation requirements. Export import trade becomes very complex and cumbersome when we have to do the documentation under the LC, under the contract, and they get checked and verified at different levels, which could be the exporters bank, could be the importers bank, could be the importer. And so it is very important that the documentation is to be done error free and in compliance. Second would be buyer and counterparty information. So whenever MSMEs are going into a new trade relationship with their foreign importers, they usually do not have much information about the credibility of the buyer, and hence there are transactions which end in non-payment or dispute or other issues in the transaction. The third is the due diligence of the entire transaction, which requires knowledge of the buyer risk, the political risk, geography risk, logistic risk, and all other associated risks which the MSMEs need to be aware of before going into a transaction. For example, they could be supplying to a very good buyer but in a unstable geography. So if they are not aware of such conditions, of the associated risks of the transaction, that particular transaction could land up in a non-payment and non-realization of the receivables of the MSME. So that is also a potential scenario. The fourth being geography and other risk parameters which are associated with a trade relationship, where the MSME should be looking at a 360-degree approach of every transaction of their existing buyers as well as new buyers, given that the global scenario. These are the four major challenges or potential challenges.
So, Indrajit, you have picked up the most common and the high priority one and the high risk one challenges which MSMEs faces. Can you tell quickly some pointers to us in respect of how these can be navigated in a better way, which MSMEs audience can hear and they can learn something from that?
One of the first things we have to understand that cross-border trade is very document heavy and all the documents need to be in order for the MSME to realize their payment on time. Otherwise, the documents would unnecessarily get stuck at the exporter's bank level or the importer's bank level, and these would lead to non realization of the payment on the due date. So, for that, the MSMEs would need to follow a standardized procedure and a protocol of making documents. They would perhaps need external help from consultants or their working capital bank who can guide them on the documentation side. They should be using standard softwares and technology which can create them or guide them through the process of issuing standard documents which are compliant to cross border trade. And also, they can take help and assistance from different support services to kind of work on the documentation side so that their process gets improved and also their realization comes on time. Third would be building internal controls on staff and having their processes in line with the requirements of the cross border transactions and the parties involved in the cross border transaction, which could be the exporter's bank, the customs, the shipper, the importer's bank, the importer themselves. On the other challenges which are related to new buyer information, where they are looking at a prospective transaction with a new buyer, and also on their existing buyers, they need to understand how much of exposure to be taken and what are the changing financial credibility of their buyers also, which is very important. And for that, the MSMEs either reach out to their banks who give them information from different sources, or they can get a counterparty report from the agencies like Dun and Bradstreet or CRIF, who can give them a report on the risk rating of the buyers, which will give them clarity of how much exposure they should be taking on a particular buyer. In terms of geography and other aspects related to trade and all the risks associated, they should also be aware and they should reach out to their working capital bankers or take external opinions or consultancy services to understand what are the risks and whether they are adequately covered to manage the risks.
Okay. So, Indrajit, this is briefly you have well covered about the challenges typically MSME faces and the kind of answers, possibilities, solutions they can look forward for, and support they can look forward for. Now, let's understand what are the risks involved. There are various kind of risks you have mentioned at the since the beginning of our discussion. You have highlighted many risks. Now, before closing a session for the today, I would like to understand what are these different risks involved for MSMEs in doing export import financing, and could you just elaborate on that?
Yes, definitely, Tripti. There are different types of risks involved in cross border trade, and every MSME should have it in mind while they are discussing new transactions or even existing transactions, given the changing scenarios of the global cross border landscape. The risks primarily involve political risk, involving the political scenario of that country, the legal risk, which covers the legal aspects of the exporter's country, the importer's country, the credit risk of the buyer who has to make the payment on the due date, the performance risk of the exporter because the exporter has to produce the material and ship the material in quality as per the terms and conditions of the PO, the risk of quality because there could be damages during the transit because the goods usually move in containers and take quite some time to reach the destination. And also there is logistic risk. Out of these, the three major of the risks, I would say, has to be the payment risk, and which is the credit risk on the buyer. The second would be a currency risk because currencies keep on fluctuating and hence there could be a effect on the liability on the due date. And the third would be logistic risk because in the transit the quality of materials may get affected. So these are some of the major risks that the MSME should be aware of before getting into cross border transactions. Okay. So for a MSME to mitigate all this kind of risk and be secured whenever they are doing a transaction is of key importance. So the MSME would have to take insurance themselves in order to cover certain risks like political risk and a credit risk of the buyer and the buyer's geography. If the MSME is taking a financing, then the financer would also have to take an insurance for the same conditions. For currency, the MSME would take a forward in order to hedge their positions. For a logistic risk, the MSMEs would typically take a marine insurance, and which is again provided by leading insurance companies in the country. So these are some of the options which the MSME should be aware of in order to mitigate all the outstanding risks.
Wonderful. So thank you so much, Indrajit. In short masterclass, you have given us entire perspective of export-import finance, which our listeners could get into their journey of starting, if not already doing it, into export-import finance. And we are going to meet you again in the next episode and understand upon more that how you are bringing support to MSMEs for their export import finance through RXIL Global.
Yes, Tripti, definitely. And I'm looking forward to the next session where I would be talking about RXR Global and all the solutions to all the problems of the MSMEs that we have envisaged on that platform. And looking forward to that.
Wonderful. And I will request all the audience, if you have not already subscribed for MSME Talk, do go ahead and subscribe on the platform where you are listening so that you get the notification when the next episode gets released. Thanks, Indrajit. See you again.
Thanks, Tripti.
Hey, if you like the information shared on the podcast, why don't you give some good reviews to us on Apple or Spotify? Through this episode, I hope you would have got some answers to your queries and guidance for way forward. Do share your learnings from the episode, your feedbacks and suggestions. If you are an entrepreneur and have questions from experts or any particular topic or profile of expert you want to hear, or if you are an industry expert with MSME as a target audience, do reach out to us. Our link is given in description. And at last, please do subscribe for MSME Talk podcast and don't forget to share the podcast link with your friends, family and network. Take care. Goodbye. Happy to share MSME Talk podcast and the Speak ranking chart of 10th country in the Apple Podcast country level entrepreneurship category. If you are an expert or provide product or services to small businesses, MSMEs and startups, reach out to us to discuss showcase opportunity in MSME Talk. Contact details given in description.